and welcome back to our weekly mortgage rate segment. I'm Megan Abdelaziz, RealEstateSINY.com's mortgage reporter. For the past few weeks, we have seen the mortgage rates continuing to rise. Well, this week, the mortgage rates actually went down. The 30-year fixed rate is at 4.12%. The 15-year fixed rate is at 3.30%, and the 5-year adjustable rate is at 2.99%. These slight decreases came after the Federal Open Market Committee finished their meeting and Chairman Ben Bernanke held his press conference. We first took a look at the housing market to see how it is going. For the housing market, there were two reports released during the week. One was on a report on new residential construction, and the other was a report on the existing home sales. The first report on new residential construction for May was released on Tuesday, June 18th by the U.S. Department of Housing and Urban Development. In this report, they had showed that amount of building permits, housing starts, and housing completions that had taken place in May for privately owned houses and single-family houses. First, we looked at the privately owned houses. Between April and May, there was a 3.1% decrease in the amount of building permits authorized, but it is 20.8% higher than it was last May. There were 6.8% more houses that began to be built in May from April, and it is up 28.6% from May of 2012. As for the housing completions, there was a 0.9% drop in the amount of privately owned homes that were being completed in May from April, but it is also up from last May by 12.6%. Now let's take a look at the new residential construction for single-family houses. There were 1.3% more homes authorized to be built in May than in April. There were 0.3% more homes that got started in May from April, and there were 4.2% more homes that were finished in May from April. The second report on the existing home sales for May was released on Thursday, June 20th, by the National Association of Realtors. In May, there were 4.2% more existing homes that sold from April, and 12.9% more from May of 2012. At the end of May, there was a 3.3% increase from April of existing homes on the market, which means that there were 2.22 million existing homes on the market nationally. Lastly, this report talked about the national median home price for May, which was at $208,000, up 15.4% from May of last year. After the housing market, we took a look to see how Americans feel about the economy. Gallup.com released their U.S. Economic Confidence Index on Tuesday, June 18th. As per usual, this index is formed from the two polls, the net ratings of economic outlook in the U.S. and the net ratings of current economic conditions in the U.S. The first poll, net ratings of economic outlook in the U.S., showed a little bit less optimism in the economy for last week. The poll came in with results of 49% of Americans thinking that the economy is getting worse, while 45% think that it's getting better. 2 weeks ago, only 48% of Americans thought the economy was getting worse, and 47% thought it was getting better. The second poll, net ratings of current economic conditions, came in with the same results as 2 weeks ago. 33% of Americans think that the current economic conditions are poor, and 20% think that they are excellent or good. With these results from the two polls, Gallup.com updated their weekly average U.S. Economic Confidence Index to -9, down from -7 2 weeks ago. Between last Wednesday, June 12th, and this Wednesday, June 19th, the stock markets didn't move around too much. The Dow Jones had stayed between 15,000 and 15,350, and the S&P 500 had stayed between 1,610 and 1,655 during the week. The 10-year U.S. Treasury bond yields had moved from 2.25% Wednesday, June 12th to 2.33% on Wednesday, June 19th. These slight movements in the stock market and the interest rates were from investors waiting to see what the Federal Open Market Committee was going to decide with their quantitative easing program. Lastly, we will take a look at what actually happened at the Federal Open Market Committee meeting that was held on Tuesday and Wednesday, June 18th and 19th. In the Federal Open Market Committee statement, they noted that since their last meeting at the end of April, they have seen a moderate growth in the economy. The sector in the economy that is lagging and what causes people to worry some is the employment sector. While employment has been increasing each month, the unemployment rate is still high at 7.6%. Since the unemployment rate is still high, the Federal Open Market Committee decided to continue their highly accommodative stance on monetary policy and their quantitative easing program until the unemployment rate drops to 6.5%. This bit of good news from the Federal Reserve helps bring the mortgage rate slightly down, but where they go next is more of a concern for us. Along with the good news of the continuation of quantitative easing, the statement also speculated that they may be ending the program sooner than later, which caused investors to worry some. So depending on how investors are feeling now, after a few days, the mortgage rates could continue downward a little, or they could go back up. Make sure you check out our mortgage blog each week on trendingsiny.com and to tune in next week to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, and subscribe to our YouTube channel and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestateSINY.com.